Welcome to Biotechonomics TV. I am David, and today, episode 1, we're going to talk about the 2020 IPO market and the role biotech has played in it. So one of the interesting things is if you look at this year's IPO market, we've had about 170 companies go public on US exchanges. Biotech has represented about 40% of that. And that doesn't include devices or other kinds of healthcare stocks, just biotech. So it's interesting, we talk about the bioeconomy, and a lot of times it gets talked about in terms of simply the technology or agricultural bio or synthetic DNA, and there's a lot of interesting things happening there. But I think another aspect of the bioeconomy that we need to start talking about is that we're already feeling it financially. We are already seeing biotech account for a greater and greater share of initial public offerings. And as you can see here, biotech currently this year has accounted for about 2 times as many IPOs as traditional internet software and cloud companies. Now, one thing that's interesting about this is if you look just here in the Bay Area, if you isolate this just to companies based here in the Bay Area, there have been 15 Bay Area biotech IPOs this year and just 9 internet SaaS and cloud IPOs. Now, there's some big name internet companies out there. There's DoorDash, Roblox, obviously Airbnb. But if we look simply at the volume of IPOs, biotech is still ahead. And what's interesting is this is a trend that sort of started in the 2000s, where you can see the ratio of internet IPOs to biotech IPOs has been sort of decreasing if we go back to 2000 and through the 2010s and now. And what we're starting to see is this trend is reversing, where biotech is now accounting for a greater share of Bay Area IPOs than internet software and cloud companies. So to put this in some broader perspective, you might think, well, how do we know this is going to continue? What is going on with the IPO market, and how do we know it's going to continue? Well, one of the key measures in the IPO market that you want to look at is the VIX. Now, you might ask, what is the VIX? The VIX is a volatility index. It's computed by the CBOE based off of buying and selling activity in S&P 500 index options. And it is used by investors as a measure of expected volatility in the market. And the reason it matters so much is it is the #1 metric used by bankers to determine whether they are willing and ready to bring a company out into the public markets. And you might think, well, what about the level of the stock market? That's important too, but you have to think about the role of a banker, where they're trying to mitigate their risk. And nothing is more risky when you're pricing an IPO that's going to come out in a day or two than extreme volatility in the markets. And as we can see here, the VIX has come down from its COVID highs, its spring COVID highs, when it popped up to about 80, back to about the mid-20s. And the mid-20s is generally the breaking point for where the IPO market starts to become a lot more healthy and bankers are a lot more willing to take companies out. And you can see we're right sort of on that edge, and we've been hanging out there now for a couple months. And maybe there's a little bit of a bump here around the time of the election. But as long as the VIX stays at this level, we should expect that we will continue to see a pretty healthy activity in the IPO market. And with biotechs accounting for a larger share of that IPO market and a significant number of venture fundings over the last few years, this suggests we should see a healthy biotech IPO market heading into 2021. In fact, just in October alone, we saw 15 biotech IPOs on US exchanges. So that's it for our first edition. Please check out our website at biotechonomics.com. Thank you for joining, and we'll talk to you soon. Thanks.